All right, so in this video, I'm going to be, I'm going to talk about how with my trading probability model, you could have turned $25 into $142, netting yourself a 568% profit over just 2 days. So skip ahead into later in the video if you want to just see how I did it, but I'm going to give a little backstory on what the trading probability model is. So during 2 weeks of late June, early July, I started collecting data, and that data consisted of day of the week, open, close, high and low and close of the first 2 hours of the S&P 500. And then I would track where the open price laid on the 9 EMA, the 20 EMA, and the yearly VWAP. And then I would track the gap and how big the gap was, and I'd set a threshold of around 0.3%. So if it was larger than that, it would be considered a big gap. So it'd be big gap up, big gap down, small gap up, small gap down. And essentially, I would track all of this, and I would report the numbers, and I would basically create a large data set. And you could do this with different indicators, the RSIs, the MACDs, Bollinger Bands. You could do this without that. You can do this with like literally anything, but I just used VWAP and EMAs because personal preference. And basically I put that, what is currently 900 days worth of data, into a pivot chart, and I have been trading based on probabilities. And with this data, you could see a lot of stark differences and biases and edges to be made with just using these probabilities. And I trade off that. I essentially go through different pivots, and I basically see these variables add up to this percentage of probability. These variables add up to this percentage of probability. And then if the variables are too close together, like it's a coin flip, I would basically change the yearly VWAP indicator to the monthly VWAP, and I would see where price lays, and I would just take the retraction down to VWAP, or the retraction up to VWAP. And that's what I've been trading on for the past month. And over the past 35 trades, we have not average, our current win rate is at 44.44%. So we've taken 35 trades, and 44% of the time we've won. The average win is netting us 120%, with our average loss being 50%, which is a very good R to R and, risk management. But, it's only over 35 days, so the confidence level of this is not reliable yet. But I wanted to show the hypothetical of what you could have done over this past week. The trades that I'm talking about are Monday and Tuesday. Today is Tuesday. So on Monday, I just want to spit out some numbers for you guys. The trade that we took was calls, and we took calls because let's see here. We took calls because we gapped up, and it was a big gap up. We were above the 9 EMA and below the 20 EMA, but we were still above yearly VWAP. And so with those variables, mushing them around together, we found a really stark imbalance on the 920 VWAP variables, where when we when we big gap up, because that's what it was, when we big gap up and we're above that variable, below a couple variables, there is a 81% chance that the market was going to go up. And this has only ever happened 11 times. So I was a little bit shaky on the reliability about that. But out of 11 times, try and flip a coin and land on heads 9 of the times. There's only a 2% chance of that ever happening. So I liked my odds, and I took calls. And that day we netted ourselves 296% profit on contract. The open price of 625.61, close at 628.95. So on the S&P 500, that's only 0.53 with a $3.31 per share move. But you got to think, we're dealing with 0 day till expiration contracts. So 2.31 movement is 3 strikes, which is a lot of percentages as volume, especially if we're going to be able to get out within the first 2 hours of the market. and that delta doesn't really kill us. So yeah, we ended up netting ourselves 296% profit on that. So $25 contracts turned into $99 contracts with a profit of $74. That's a great win, and that is a win that can literally sustain us for the rest of the week if we were to lose for the remainder of the week, which is great. So coming into this morning, we have essentially $99 to work with, but we're still going to remain around the $30 contract size. That's usually around $3.5 to $4 strikes outside of the money, mainly because I've just found that that's been the most affordable one for me. And I'm going to try and study the differences in like delta, the differences in effects of delta, whether you're in the money or out the money. But for the most part, this has been doing really well. So $3.5 to $4 strikes outside the money has been really well. So this morning, it's a new day, and we had a small gap to the upside. We were above both 920 and the yearly view up, and it was Tuesday. So we mashed those days together. We mashed those variables together, and it was honestly pretty when we put the variables of 920 view up in the small gap. We have literally like a 52% chance of the market to go down. And then we look at the day in the gap. So just the day and just the gap. So it was a small gap up on Tuesday. We had a 44% chance to go down. So it was really coin flippy on the down. So we're leaning towards down, but it wasn't really that nice. So we changed the yearly view up indicator to the monthly view up and found that we basically opened right next to the second deviation of high view up. That's an indicator that we're going to take puts, because the second deviation of high view up means that 95% of all price action lies below that. So we're going to take a retraction, hoping that market is going to come back down, especially because yesterday when market rallied, it stayed at third deviation. So we're kind of there isn't a 95% chance of this happening, but we're due for a retraction back to VWAP to put price action back into that 95 percentile. And so we took puts right at the open. Contracts costed us $28, and we opened up our laptop back at 8:30 because our variable covers 2 hours worth of the market. And we found out that our contracts were up 154%, $28 contracts into $71 contracts, netting ourselves a $43 profit. So you add those two together, you turn $25 into 99 plus, yes, you turn $25 into $143 because you add the profit from loss from the day one and the day before. So 25 turned into 142, pardon my missaying, $142, netting ourselves a profit of 568%. Yeah, it was a really cool past 2 days. And honestly, that hypothetical can happen to anybody. And the only thing about this model is that losing and winning come at a win rate. The current win rate is 44%. So us winning 2 days in a row is actually unlikely. Us winning one day at all is unlikely. But I mean, you still have your 44%. Here's the lovely part about this model, and the lovely part about option trading as a whole, is that the maximum loss you could ever take is 100%, and the maximum win, well, that's up for debate. Over the past 35 days, our maximum win ever has actually been yesterday's 296% win. We've had 282% on July 15, and we had 218% on June 27. So it's looking like our ceiling is around 250-ish%, but that does come with a little bit of catch. Yesterday, when we had the 296% profit, if we actually exited the market 20 minutes earlier, we would have been up 400%. So we actually don't know our ceiling yet, and we're not going to really know our ceiling for another maybe 50, 100 trades. This current model is at 35 trades right now, and I think once we get to 100 trades, I'm going to be able to sell this as a signal, almost a recommendation signal, sort of just statistic newsletter, which I want to, offer this to you guys. I don't want to be one of those trading gurus that just sell signals, but I want to actually show you guys that these are like based profits and that this is nothing merely more than a statistic. The profit reaped from these trading based off of this probability model. As of right now, I'm going to consider it luck, and until we can reach a 95% confidence interval, because what I've been doing is I've been putting all of our performance into a confidence interval, basically what you would hear from like statistics, where like we're 95% confident that this probability model is within the ranges of this to that. And with our average win being 120% and our average loss being 50%, we only need to reap a 29.4% win rate in order to be profitable. And we're currently at 44, which is really good. So I use my 35 days worth of trades and I plug in my win rate, and I find out that the confidence interval for being 95% confident is at 28% win rate. So at a 28% win rate, we're not profitable. So I can't sell this at all as a reliable tool until we reach that 95%. And if we win tomorrow 400%, that literally is going to put us over. But I'm going to put a strong probability that we're going to lose tomorrow based on these past profits. Do I know that for sure? No. And there's one thing that you need to do when you're doing this type of trading is that you can't mix possibility with probability. Is it possible that we win 400% tomorrow? Yes. Is it probable that we win 400% tomorrow? No. But the probability of us winning does not change when it comes to today's trade and tomorrow's trade, because the win rate is always changing. It's not a fixed win rate. This isn't blackjack. This isn't slots. There is no fixed win rate right now. This is the United States stock market. No casino has ever been able to beat the US stock market when it comes to this. Why? Because the casino is a fixed rate. In a card game, the US stock market is based on buyers and sellers, not aces and jacks. So essentially that's what it was over the past 2 trading days. And the hypothetical of you turning your starting $25 into 142, giving yourself 568% profit over the past 2 days in just 2 trades. Yeah, so that's pretty cool. And it's a really cool model that I built. And I'm, sorry for not having a cinematic video and not having microphones. They're currently broken right now, you see. I don't know if you can see it, but this is the adapter that goes to my phone. And this is what it looks like now. Tiny little nubs that separated. Yeah, thank you to gravity for dropping on the floor. It's lovely. But yeah, that's what the current probability model is. And you may be asking me, why am I not showing P&Ls of this on my own trading? I'm currently trading on a really small account. It is $190 deep, and I can be trading on this. And I cannot make any excuses because I should be trading on this. I am being really undisciplined when it comes to waking up early enough to actually catch the trade. I live on the West Coast, so I have to wake up at around 5 in the morning to even be cognitively awake to take these trades. So I've just been really slacking. But the data doesn't change when it comes to the value of the contract, because contract value is recorded by the minute by every single broker. So I can track it, and then I could track, what the charts were saying. So wake up every single morning, see where the market's going to open at, and take the trade based on that is what I'm doing. And, a lot of people say that oh, you need a live account P&L to justify this. Well, I don't, and I don't think I need to. I think it'd be nice to have in my content, that my TikToks and my YouTube shorts that I upload, to show, reliability and that I'm not a fraud, but I'm not a guru. I just want to say that I'm not going to sell a course. I'm not going to sell a signal group of just my opinion. I want to sell a statistically analytic based tool that shows probability of what we're going to be able to do in the market. And I'm not going to make it crazy expensive. I'm not even going to make it yet. I'm not going to sell anybody anything. If you want me to sell something, it's not going to happen anytime soon, at least. It might happen, in the next 2 months, because I'll have 100 days worth of trades to, back myself with. But until then, this is going to be something that is almost like a small project to me. As much as ChatGPT likes to evaluate this thing at $20, $30, $40,000. This thing is currently worth nothing. So yeah, that's basically it. And I just wanted to talk to you guys about where we are in terms of the probabilities and, the model itself. Because this is like, I used to talk about investing. I used to talk about, trading and strategies, and I like to keep my audience updated on what I'm doing. And yeah, follow my TikTok and shorts for, more fun stuff, more stuff that hopefully gets my audience to me so I can, eventually be able to monetize my project. So yeah, I'll see you guys in the next video, and yeah, peace.